Morning, guys. It's Monday, October 27th, 5:28 a.m. Central Time. Grain markets are higher to sharply higher this morning. December corn futures up 5 3/4 at 4.29. January soybeans up 17 cents at 10.77 1/4. December Chicago wheat up 9 1/2 at 5.22. December Kansas City wheat up 9 1/4 at 5.10 3/4. December spring wheat up 7 1/4 at 5.64 1/4. Big U.S. China news over the weekend. Why don't we start there?
So, U.S. and Chinese leaders made progress on a trade deal in Malaysia over the weekend. According to Treasury Secretary Scott Bessent, President Trump's recent 100% tariff threat on Chinese goods is now off the table. He also hinted at a possible agreement that would extend the tariff truce between the two nations and defer China's export controls on rare earth minerals. In addition, China is expected to make substantial purchases of U.S. soybeans. The discussion set the stage for a meeting later this week between President Trump and Xi Jinping in South Korea, where an agreement is expected to be finalized.
Let's listen to Scott Bessent discuss this on television yesterday.
Well, Martha, in case you don't know it, I'm actually a soybean farmer, so I have felt this pain too. And there are a couple of things happening here. One, the Chinese have substantially dropped their purchases to almost zero, so they unfortunately have been using American farmers who are amongst President Trump's biggest supporters. I think he had more than 90% support. And then this was one of the biggest crops in 20 or 30 years, so it was a perfect storm. But I think we have addressed the farmers' concerns, and I'm not going to get ahead of the president, but I believe when the announcement of the deal with China is made public, that our soybean farmers will feel very good about what's going on, both for this season and the coming seasons for several years.
Scott Bessent's just a soybean farmer, just like you guys watching. He's worth $600 million. He's just a soybean farmer. He does own some farmland in North Dakota. The estimates are that he owns between $5 and $25 million in North Dakota farmland spread out among 5 counties. He's part of some investment group, so you can't really track it. In any case, the soybean market has reacted very, very positively to what Bessent said and the progress that was made over the weekend. This January contract, and I think most of the soybean contracts traded on the board, gapped higher last night, above some trend resistance early this morning. We're not quite into fresh calendar year highs, but we're pretty close. Now, on a continuation basis, we are now trading the highest level since July of 2024 in the soybean market, which is pretty impressive. You've also got, I believe, a gap on this weekly continuation chart. I'll be very curious to see in the case of soybeans, first of all, can the rally stick? Because we don't really have any details here. You know, there's another side to this story, and that's the Chinese side. China has acknowledged that, yeah, we have some sort of framework for a deal in place, and they did mention agriculture, but they didn't really say anything specifically about soybeans or about purchase volumes or about timing or anything along those lines. The corn market popped overnight also, still not through that 431 area on the December corn chart, which is going to be a big area of resistance. The wheat market looks a hell of a lot better. Kansas City wheat had been confined to this downtrend channel for 2 or 3 months, and we're out above that. I'll be curious to see, again, can we stick today? And also, what does the cash market do? Is the cash market going to play along with this rally, or are you going to see basis deteriorate even further than it has in some parts of the country? We know that because there's been no PNW business, basis in the Dakotas and Minnesota, places like that especially, has been very, very bad. So this is all great news, but we've got Trump and Xi coming up later this week, and hopefully some more details. So it's all good for now, but it could change fast.
The U.S. is launching an investigation into China's compliance with the Phase 1 trade deal. The 2020 agreement, negotiated during Trump's first term, required China to significantly increase imports of U.S. agricultural products, particularly soybeans. A public hearing is set for December 16th, and the probe could result in new tariffs on Chinese goods. The announcement comes just 1 week before Trump and Xi Jinping are expected to meet in South Korea.
Yeah, I don't know if this is the best timing for this investigation. Like, hey, why don't we get the trade deal done and then maybe we can talk about this, or maybe let's not talk about this at all and just worry about the trade deal moving forward. In any case, there's not a great way to track it. The Peterson Institute did a study on this, and they estimated that of all the commitments that China was supposed to buy, and this is agriculture plus other, they only hit 58 or 59% of the 2-year target. Now, with regard to agriculture, China was supposed to buy, I believe, $40 billion per year in U.S. agricultural products over a 2-year span, 2020 and 2021. The Peterson Institute estimates that they only hit 64% of that target. So there was a whole bunch, or maybe it was 77%. They hit 77% based on the Peterson Institute numbers. There was a whole bunch of Chinese buying of U.S. corn and soybeans after the phase 1 trade deal was signed in January of 2020. The one thing to be aware of is that, first off, they signed the deal and China didn't really start buying until it was like 7 or 8 months later. So it's not something that has to happen right away. I mean, the market feels better about this right now, of course, but just to go back and look at what happened last time, the buying didn't start right away. We hope that maybe this time is different. So I don't know. I'm not necessarily thrilled about the timing of the investigation because I think it's going to look bad to China just optically, but we'll see what happens.
Cattle futures closed sharply lower on Friday, with the majority of live and feeder cattle contracts falling to their daily limits. The sell-off was triggered by reports that Mexico's Ag Minister and U.S. Ag Secretary Brooke Rollins will meet this week to discuss reopening the border to Mexican feeder cattle imports. Reopening the border, however, remains questionable given the ongoing outbreak of New World screwworm down in Mexico. Futures were further pressured by Trump's plan to lower domestic beef prices by increasing imports of Argentine beef. These volatile headlines from the Trump administration have fueled uncertainty, causing speculators to unwind their massive net long positions in the cattle market.
So the cattle market got slammed on Friday. In particular, the December live cattle contract is now more than $14 removed from the peak that happened just last week or a week or two ago. Same thing in feeder cattle, now down $32 from the peak. Mackenzie, what has this done to change fundamentals, or is this all just speculative money getting out?
The latter, speculative money getting out. This has not changed. Nothing has changed yet. And everything that is happening right now is just being driven by headlines. And I do wish things would calm down. Obviously, that'll take time. Everyone's just bailing out with the uncertainty with Trump's tweets now being a factor.
Almost feels to me like Trump kind of warned you, like you should hedge cattle when he started talking about Argentina beef and like beef prices. It was like maybe that was and in hindsight, of course, it's easy to say that, but maybe that was a sign that, hey, maybe it's time to do something about your cattle that you own, yeah, nasty thought. Doesn't mean it's over, but we're in the midst of kind of a nasty correction here.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
On Thursday last week, I laid out my game plan for 2025 corn and soybean bushels. We had some forward sales on the books. We've done a little bit of marketing as of late, but I've still got a lot of bushels to price. The way that I do this is I advise cash sales. I advise that you guys do cash or HTAs. I don't advise futures or options or anything along those lines. I make this super easy to track. I track it by crop year, and percentage, and kind of laid out the game plan moving forward. And there's some caveats to my game plan. There are some things that could change my game plan. But if you guys are looking for a real basic approach to cash grain marketing that's not complicated, that's super easy to follow, that's super transparent, this is something you should take a look at. I include all of my cash grain marketing recommendations, everything that I've advised for the last couple of crop years at the bottom of our standard grain morning update every single business day. So you might want to check that out. Chris Barron was on with me on Friday. Fall logistics and dock versus shrink. Have you ever wondered if you should dry corn or if you should haul it wet? Chris made a tool available that was a spreadsheet. You go punch your own numbers in and figure out what actually makes sense from a dollars and cents, just mathematical standpoint. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. We don't want to talk to you. We don't want to call you. We don't want to sell you brokerage or crop insurance. We just want to send you our content for $50 a month. We send out 2 emails per day. The standard grain morning update is jam-packed full of stuff. The midday video blast goes out at 10 a.m. Central Time. You can be on the text message list if you want. You can reply to the text. We'll get back to you if you have questions or concerns or whatever. But that's it. You can sign up on your phone. I know you guys are busy. It takes about 10 seconds to sign up on your phone. It takes about 10 seconds to get into the videos. Once you get an email, it's just click to play. There's no messy login instructions or anything like that. So give that deal a shot this morning, guys.
Inflation came in cooler than expected in September. The CPI rose 0.3% month over month and 3% year over year, slightly below economists' forecasts of a 0.4% increase and 3.1% respectively. The annual rate marked a 0.1% increase from August. Although inflation remains above the Federal Reserve's 2% target, the softer than expected CPI report has heightened expectations that the Fed may cut interest rates at its meeting this week.
So the Fed's going to cut despite the fact that we're a full percentage point above their stated target. Although I think most people believe that the Fed has quietly raised their target to more like a 2.8, 2.9. So 3% is the highest since January. And some people think that there are flaws in the CPI data. So this indicates that inflation, this basket of goods and services, is 3% more expensive than it was a year ago, which is it's not crazy. It's not the 9% that we saw back in 2022. Some reports indicate that the Bureau of Labor Statistics has all sorts of problems and that this data is not necessarily fair or realistic. They've had staff and resource cuts. They've had problems with data collection. They're using what they call imputed values for a lot of things. They're estimating a number of items because they don't have actual price quotes because they're understaffed or underfunded or they're not available. So there's I think some problems with the data. When you look at the big picture CPI, of course, we're at all-time highs. This basket of goods and services tracked is up 27% since the start of 2020. And in reality, it may be higher than that. Inflation, of course, has been a huge deal since in the post-COVID era.
The stock market surged to record highs on Friday. The Dow Jones rose 1%, topping 47,000 for the first time, while the S&P 500 gained 0.8% and the Nasdaq climbed 1.2%. The rally was fueled by the softer than expected September CPI report, which we just talked about, and that, of course, heightened expectations that the Fed will cut interest rates by 1/4 of a percentage point at both of its remaining meetings this year. As the government shutdown extends into its 4th week, traders are operating on limited clarity amid a continued absence of fresh economic data.
Fresh all-time highs in the stock market overnight, and I think this is probably mostly on the U.S.-China news. But the CPI stuff, it was that 3% was actually a little bit lighter than they thought. I think they were looking for 3.1. So the Fed's going to cut despite that higher inflation. So you got the Fed cutting, you got U.S.-China trade deal optimism, and the market looks really good. This is a channel that I've been using for probably 2 years now, where you've got your COVID low up through the 2022 bear market low, and then the April tariff scare low. We're actually outside the upper end of that channel on the futures chart this morning. So I can't help but wonder if this thing has become a little bit overextended. But historically, of course, it does not pay to bet against the S&P 500 or the U.S. stock market. What did cattle do on Friday? I know we talked about it a little bit.
Right. So all the live and feeder cattle contracts declined their respective daily limits with the exception, of the front month contracts. And then cash cattle trade was mostly steady to $2 lower across all regions last week compared to the prior week, with cattle trading anywhere from $238 to $240.
The S&P 500 is up 60 points this morning. That's about 0.9 of a percentage point. The Dow Jones up 250. Nasdaq's up 335 points. We've got treasuries off just a little bit. Crude oil is down 62 cents, and the December WTI at 60.88. Have a great week, guys. I will be back on Tuesday.